Good afternoon. Ira Epstein of Linn Associates with your agriculture update for this Wednesday, the 22nd of May, 2019. Now, we're getting on to 2:45 in the afternoon. It got quiet in grains. You were up about 6 cents in beans after the plunge it had yesterday. Wheat gives up a bit, down 6 cents, and corn pretty much unchanged. The market's waiting right now to see what the farm aid package that the president has been proposing is going to actually look like. Because farmers have to make decisions for this year's crop, we're hearing that it could be tomorrow that they release the numbers. Now, the numbers that were at first floated, doesn't mean they're committed to them, were $2 a bushel in soybeans, 63 cents in wheat, 4 cents in the corn. This is all based on lost trade in theory from the U.S.-Chinese squabble on trade and the tariffs that they each have put on each other. And of course, you know the Chinese aren't buying our products and we're stopping their technology. So nothing has really changed there. In the energy sector today, because corn gets affected by energy, there's ethanol involved there, so I always like to talk about it. Big build, surprise build in the EIA numbers of net, about 9 million barrels of oil and products. So as we take a look at the weekly area chart of closes on beans, you're number one under the 18-week average of closes, which for me means the bias is down. I define if the market's over that number, upside bias, downside bias when you're under it. Resistance, if you were to get a hard rally, could be back to that number at 881. When we take a look at soybeans, the one thing you should keep your eye on, do you remember we had this gap right through here? And this was the day that made it up. It was the low of May 6th to the day before. So you'll see here, then you gapped. Charts often fill gaps, and I know I was talking to you about that when this was going on. So what the market finally did is it got alive, came in, filled the gap right here, and that happened on May 15th, a week ago today. And since then, the market has really not gone much of anywhere. Yesterday, not today, yesterday we had an outside day down. Big reversal day. To me, yesterday's high is still very important in the market because when I put on my swing line study, and this is what I teach in my charting course, you've got lower highs, lower lows, which is bearish. I filter that with the 18-day average of closes. Again, the market is under the 18-day average of closes, so the bias is down. What would negate the trend would be taking out 846.5, the high of the swing line. What about if the market heads down from here? Well, if it were to head down, the Bollinger Band's offering one of the supports, and if you'll notice, the lower Bollinger Band's moving about 2 cents a day, but if you look here at the top band, it's dropping about 6, and that's how the math works on the algorithm right here. It doesn't always do it that way, but this thrust down is weighing in there, so it's bringing the resistance of the market very close home. Tomorrow could be in the 850 range. As we look at momentum, you've got momentum pointing up. So there's a bit of divergence. You've got the trend down is divided by the swing line. You've got bias down, but momentum, which often leads price, is pointing to the upside. Where's the battleground for this market? Pay attention to the 18-day average. You've hit it 1, 2, 3, 4, 5, 6 days. Only 5 business days to the week. So over a week, you just keep hitting that number. In the meal market, it's a similar pattern, or is it? You've got the lower highs. I could argue with this break here, you've got the lower low. The settlement today at 298.30, though, was over the 18-day average, so they're not the same. If this market decides to get up and take out 302.20, does two things. Number one, at that point, it negates the downtrend. Second, it springs what I call a bear trap. Yesterday was a bear trap with an outside day down. If you take that out, the probability is the market runs to the closest of a key moving average above it or the Bollinger Band. In this case, it would be the Bollinger Band, and that would be what I'd be looking for if the market gets up to that number. I think to cement the downside, you've got to go back down, not take that out, and take out the lows of yesterday. Right here, that low on this outside day down was 293.10 under this 293.70 that you see from the swing line. In the soybean oil, this is a more bearish looking chart, but it too has divergence. You still have momentum pointing up. You've got lower highs, lower lows. Even if you were to take out this high right here, you wouldn't turn the trend up, but you'd spring a bear trap, just like I'm talking in the meal, and if that came out, I wouldn't be surprised if you go to the wherever the upper Bollinger Band is. That number, by the way, is falling about 7 points a day, so it'd be right into 2802, something like that. In the corn market, the market was able to settle up and over the upper Bollinger Band. This is really unusual because if we count backwards, you're 294.5. Wait a minute, I'm wrong. 395.5 is the Bollinger Band. You closed a penny under it. It's not so unusual. Why do I say that? You had 1, 2, 3, 4. If I come to this day, you settled 369.5 under this number. So you had 4 days in a row over the upper Bollinger Band. I teach that each consecutive day over takes away one of those 5 percentage points. So I gave today a 1% probability coming in that the market would stay over the band, not move to the right-hand side. That's what it did. Does that mean it weakened any? No. It's moved to the right-hand side. It's certainly overbought. It's certainly a straight run up in this market. And I think everything's going to a degree, get defined over the next few days. Planting, because weather's been so terrible for the corn, government farm aid programs. We'll see what goes on. In the wheat market, you have a classic resistance of the combination of the 100-day and the 18-day average in an overbought market. I will stick with what I said yesterday. I think the smart money came out of the market in this area. Yes, at the first challenge of the Bollinger Band, they probably came out too. Then as the market got ahead of itself, I think they looked at that 100-day average and said enough's enough. In the sugar market, you've negated the downtrend very nicely, too. This rally today, back to the 18-day average, leaves in place a lower low and a higher high. So the downtrend is over. I am not prepared to say an uptrend's begun. You did finish under the 18-day average, and you are still oversold. In the coffee market, let's hear one for the boys. The first time we've hit a Bollinger Band in months. We were just talking about it yesterday, and that's the first time you have an uptrend, and I'll stick with what I teach. The first challenge of a Bollinger Band is often met by pros taking money off the table. That's what I believe, and that's what I teach. So you finished at 91.25. You got up as high as 93.80s and backed off. Not a bad play for those that were bullish. In the cocoa, you're stalling against the first challenge of the upper Bollinger Band, which was yesterday, and today the market coming back within that band. This does not mean these trends are through to the upside. They are overbought, but they've hit upside targets and some money's coming off the table. In the cotton market, cotton's quite interesting here. It's 3 days in a row where you've lost the embedded reading. Remember what I said, you're so far away, you'd need something phenomenal to make price in the 18-day average, which is the norm when you lose an embedded reading, to come together. But sometimes I look at how far apart things are and I just go, okay, I realize that this is a get me out of short time. Is it a buy? Not necessarily. Even what I call lost embedded slow stochastic trades, I don't know. I'm very uncomfortable with that one. In the cattle market, and by the way, it's not that I'm bullish or bearish. I'm nothing in that market. In the cattle market, again, you've got the cattle on feed. Now, they're talking monster numbers. The market's built to a certain degree that in. Remember, we were at the 120 level in April. Here we are in a 107 area. That's a 10% drop in the market. The trend is down. The bias is down. Momentum pointing up. So fighting each other there. Oversold condition in the feeders. The pattern is one of lower highs, certainly lower lows, trend down. Support the lower Bollinger Band if it can get down there. But again, you're going to start evening up in this market because of that cattle on feed report. And in the hog market, it's just another day at the office of hitting the 18-day average and not able to carry to the upside, to the downside. The swing line's up, the bias is down, and momentum is flat. It's a big nothing. You know the way that I keep up in the grain markets? I set up my quotes, and our QT Markets, and this is my actual phone. I didn't bring it on because, God forbid, it'll start ringing here. But I took pictures of it just so you can see how it works. You can easily view charts with studies. You can flip it on its side, watch what it's doing. You can place orders if you have an account with us. For those of you who don't want to trade those micro S&Ps, quite an event going on there. If you take a look at streaming quotes, you've got voice control. And you can say, show me weather. You can talk about it. I want to hear my quotes over and over. over. And if you're driving, instead of looking at the screen, it's going to repeat it. So it'll take everything and you're just listening to your quote board the way that you want to set it up. And you can make your quotes look many different ways. You can watch crushes. If you're sitting here as a grain trader and you're watching the crush, it's there. News, my videos, yep. Soon as they come out, we post it if you're a subscriber, and away you go. This is the other view of quotes if you wanted it, and this is one more view. Now, the QT news, geared to the grains, geared to whatever markets you want that news to come in on. How do you get it? Because it is free to give it a try, and I'm not looking for subscriptions from you on it. Give us a call. You can go to our website, find out more. Just click on the carousel of free offers, sign up for it. We'll get it into your phone. By the way, it works on Android and Apple phone, so no reason not to give it a try. And again, it is free. You can always click up here. If you see this icon, it'll take you right to our carousel. I'm Ira Epstein. You have a good day.